I want to do a comparison in today's video and see if I can kind of illustrate the sentiment um, differences in two separate markets. One I think is probably either at an intermediate cycle low or very close to it. The other one that I think still has a little bit further to go. So what we're looking at here is oil. I think energy is where the next real potential is at, where the next big trending move will occur. Also maybe in the stock market. I think we're getting pretty close to a daily cycle low sometime this week anyway. But I think this is where the next big trending move is going to occur at. So you can read the comments on the blog. I've been mentioning energy, and invariably the comments that we see is, nah, it's too early. Energy's in a downtrend. Nobody wants to take a stab at the energy market. The same thing that happens at every intermediate cycle low, no matter what asset, gold, stocks, oil, it doesn't matter. Nobody ever believes me when I call these bottoms. Why? Because the market has been going down either too steeply, the drop has been too sharp, or it's been going down for too many weeks or months. So the trader's mindset gets locked into a bullish or bearish, in this case bearish, mindset, and it just becomes impossible for them to see a turn. But if you look at oil, you'll see we've got 4 months, a little over 4 months of price basically in decline. We've got that characteristic ABC correction. First leg down, bounce, second leg down. We've got an undercut low. See here with it at the last daily cycle low, left translated cycle, undercut, a potential reversal. Switch this over to the weekly charts. Potential reversal off of this 100-week moving average. We don't have a swing yet, but we do in the energy stocks, and I'll look at that chart next. But a fairly long intermediate cycle. There's been 3 daily cycles embedded within it. First daily cycle here, second daily cycle here, third daily cycle here. Potential reversal. And so, one more thing. I'll put the stochastics on here. You can see we've got oversold stochastics. We've got a divergence as we made this undercut low. So all the signs are starting to pop up that the energy market is either has formed an intermediate cycle low last week, or is very close to one. I'll go to this is the energy stocks, and here same thing. We've bounced, strong reversal candle off that 100-week moving average. Got a weekly swing. We've got heavily oversold conditions on the weekly charts. So again, the components are there for a bigger intermediate cycle low. And sentiment is depressed. It's discouraged. This has just lasted too long. Traders' mindset has become locked in the bearish position, and they can't envision a scenario where the trend could turn and we could head back up into a new intermediate cycle. And one more sign, bell going off, whatever. As I mentioned before, I like to look at these leveraged funds, because often at bottoms you'll get a big volume spike, which is a sign that institutional money is sniffing out a bottom, and they're starting to pile in. We have that in the triple leveraged oil and gas fund here, Gush. Capitulation type volume here on the downside these last 3 weeks. I would like to see maybe a little bit heavier volume to the upside. Maybe we'll get that this week. But we've definitely got capitulation volume here in this triple leverage fund. It's a sign that the traders are giving up and they're just selling for whatever they can get. And that's what institutional money looks for. They take the other side of those panicked longs that are just trying to get out at any price. And so you get this huge volume spike in the triple leveraged funds. So in the energy market, we've got what looks like, or if it's not the final bottom, it should be very close. And I'm beating the drum on this, and the same thing is happening at every intermediate cycle low, no matter what the asset. Traders have gotten locked into a bearish mindset, and they can't envision a turn. So nobody wants to believe me, that it now is the time to start buying energy. Now let's move on to the other market. In gold, we have the exact opposite. Everybody has gotten locked into the bullish mindset. We've had, as energy has had four months going down, gold has had 4 months going up. So everybody is locked into the, buy the dip, don't get left at the station. Gold is ready to take off. They're locked into that kind of mindset. And so I'm trying to warn people that gold has started an intermediate decline. So when I called the top up here, nobody wanted to listen to me, just like when I called the bottom down here. And it was the same thing. Very long, extended intermediate cycle low. Traders became locked in the bearish mindset. They couldn't envision a scenario where gold could go back up. So they don't listen to me at the bottoms, and they can't buy. And so they've missed most of the rally. Well, once the rally goes long enough, enough months go by in the advancing phase of the intermediate cycle, then the mindset that developed here gets reversed 180 degrees. And now traders are convinced that gold is only going up. And so they want to buy every dip. And so we're not seeing the kind of despair and discouragement that we saw down here. Down here, it was many weeks before traders could finally buy into the idea that that maybe gold was ready to rally. So as we came out of this intermediate cycle low, and nobody believed me, nobody wanted to buy gold or mining stocks, until 4 or 5 weeks, maybe 6 weeks had gone by. Then they were ready to believe. That's not the case right now. Right now, everyone is ready to jump on the gold bandwagon again immediately. They're looking for excuses why this was the bottom, and we're going back up. We're going to new highs. We're going to break out. But that's not what you see at intermediate cycle lows. We should see the same sentiment in gold that we're seeing in energy right now. And the way that has to happen is we need at least an ABC correction, like we saw in energy, and like we've seen at at virtually every other intermediate cycle low. So here's an intermediate cycle low, got a leg down, a bounce, another leg down. We don't have, and I think we're getting the bounce this week. We may even make it up to 1250 or 1260. But then we should have another leg down. We need that ABC correction. That's what changes the sentiment. And I would also suggest that this is too short. We've only gone down for 3 weeks. That's not long enough to reverse the bullish sentiment and get everybody bearish to where all they can see is downside potential. Right now, people are ready to quickly jump back on the bull bandwagon. And again, that's not what you should see at an intermediate cycle low. An intermediate cycle low, people should be discouraged, and it should take weeks to reverse that discouragement to optimism. We've reversed from discouragement to optimism in a matter of days. So that tells me this is not an intermediate cycle low. This is the counter trend bounce that keeps everybody hoping. And then when we roll over and make another leg down, this is the bounce that keeps everybody locked on the slope of hope so that they get dragged down into the final intermediate cycle low, which in this case I think is going to play out as another complete daily cycle. So I would imagine we've got another rate hike coming in June. I would imagine that gold will probably, once we top here, I expect to top by the end of this week, then I would expect the intermediate cycle low to continue down into that rate hike in June, and maybe even a few days past the rate hike before this intermediate cycle puts in a bottom. So for gold, we need, I think we need to go further. We haven't achieved the kind of sentiment readings that we need to see at an intermediate cycle low. The weekly stochastics are nowhere near oversold yet. This is not the, this is a short-term opportunity. If you manage to catch the exact bottom, this is a short-term opportunity to catch a little upside. If you're willing to gamble this late in an intermediate cycle. But this is not the spot to take positions in anticipation of another 3 to 4 month rally. This, the energy market, this is the market where the opportunity is forming for an extended 2, 3, or 4 month rally. Oversold conditions, long intermediate decline, an ABC correction, undercut low. All of the requirements are there for an intermediate bottom. Sentiment is extremely discouraged. Nobody wants to buy. That's when you need to buy. You need to buy when nobody wants. Nobody can pull the trigger. You need to sell when everybody can only see upside for the foreseeable future. This market is primed for a sustained rally. The gold market is probably not.